Now, this is a segment I truly enjoy because we're about to do a sample business case where you have the opportunity to see how you would use this template. So let's take a look at the slide that will show you the details of this small business. So I want you to imagine that you are a hairstylist and you've opened up a salon in the South Loop. You opened a salon in 2021. Last year, you were able to achieve about $35,000 in sales. You're feeling pretty good about the salon. You're feeling pretty good about your decision so far. Based on the high demand in the area, you believe that this next year, 2024, you can come in about $48,000 in sales. You also took the time to estimate what some of your expenses will be for this next year. Your lease expense, you believe, is going to be around $18,000. Your equipment rental expense, somewhere around $4,200. Your general operating expenses, which include insurance, marketing, and your telecom costs, somewhere around $3,600. General administrative expenses will total about $1,500. You've also added some additional items to this budget. You know for sure that you won't have to make any capital expenditures this year because all of your equipment and the location is relatively new. However, you do want to consider adding a reserve account to your bank account and literally open up a separate account where you now store some money. We're going to call it your rainy day fund. That total amount that you desire would be $10,000. Your end of the year balance in your bank account was around $5,000. So you're ending 2023 with about $5,000 in the bank. And we're going to assume for this example that all your sales were in cash. There were no credit sales. All right, let's take a look at the template now. We're going to go through each section of the template so you can see how you would go ahead and use the template and use this information that we've just provided you. So let's look at section 1 of the template. We call it cash contribution from operations. It's going to include your beginning cash balance, and that's going to be the cash balance in your bank. It's going to include any sales income or revenue. It's also going to include any direct expenses for capital expenditures. So let's look over to the right. We see at the top, we have your bank account. That'll be your beginning cash balance for the year of 2024, which we know is going to be $5,000 because that was your ending balance in 2023. We're going to have the revenues earned. So we're going to put a dollar amount in for your sales. In this case, we don't have any credit sales. So we only have cash sales. So that less credit sales, that's going to be zero in this example. That's going to give us the cash available to the business. Then we're going to subtract away the typical operating expenses that we've estimated. And you'll see the list of expenses match what we started off with in the introduction to the case. We also have a line item in there for capital expenditures. In this particular example, we know that number is going to be zero. We will add up all of our expenses. That's going to give us what we call the total cash payment. That's going to be the sum total of all of your expenses. We're going to subtract A, which in this case is the cash available. We're going to subtract away the cash payments from that number, A minus B, and that's going to give us our ending cash balance before borrowing. Okay? Let's go to our next section. Now, taking a look at section number 2, entitled Desired Cash Balance. Two things we're looking at here. We want to assume a number for the cash balance. We want to assume a number. And we also are going to apply any of the other assumptions that we want to make about that number. In this case, this is going to be the cash that we're going to have in our bank account at the end of the year. It's going to be our minimum cash balance. So in this case, I call it a 6-month reserve. In short, let's say most experts believe that you should have at least 6 months of your expenses in reserve, just in case something happens in the business during the year. Of course, in this case, the $10,000 will not be enough. So she's just starting to build her reserve. But that should be a goal for all of you, is that you sit down and think about, how much do I spend in 6 months in terms of my operating expenses? Set that as a goal as the number I should have in my cash reserve. Ultimately, what it means is that if we go through another COVID period, you at least know I can operate the business for 6 months without any issue. Okay? Let's go to our last section. So there's 3 sections to this template. The first one, we're capturing the monies that are coming in and some initial expenditures. The middle section, we're looking at the desired cash balance that we would like to have in the bank at the end of the term. Now, what happens if we find out that our estimate tells us that we're not going to be able to hit the desired amount in our bank account? What should we do? So this bottom section are options that you have available to you, strategies that you have available to you. So you can have 1 or 2 conditions. You can have a cash excess, meaning you've exceeded the amount of money that you desired, you exceeded the $10,000, and you may decide to use some of that excess in various purposes. Maybe you want to pay down a loan, maybe you want to pay back one of your investors. Or if it's a deficit, you may want to go out and borrow money from the bank, maybe get a line of credit. So these are various options that you can use either to spend the excess if you choose to do so, or you could once again find a way to eliminate the deficit and actually achieve the $10,000 balance that you're looking for. So that completes the template, all 3 sections. Now let's pull it together and see what it looks like based on the case. When we add the third portion to the cash budget summary, we now see the entire document. This document you could easily put into Excel and do this for your own business. So it includes the operating budget section, it includes the capital expenditure section, and it includes the outside funding source section. So let's look what we have. So we have, in this case, ending cash balance before borrowing, $25,700. The minimum cash balance desired is essentially our initial assumption, $10,000. The cash excess is going to be $15,700. Given the fact that we have an excess, in this case, the business owner has chosen not to spend that excess and not to go out and secure any additional funding. Why? Because their goal was to at least end up with at least $10,000 in the bank. In this case, the ending cash balance projected for the end of 2024 will be $15,700. What does this mean? It means now the owner for the next 12 months will operate the business, manage their costs, make sure they monitor their revenue, and track to see as the months go by whether or not they're going to achieve this budget. If they believe they're going to fall short on revenues, then they need to make some corrective action. Maybe they'll spend a little bit more money on marketing. Maybe it's something that they cannot correct, and then they know they have a little bit of a buffer, at least in this case, $15,000 buffer, where they still may be able to hit their $10,000 even if they don't do anything to make any adjustments to try to bring more revenue in. At the end of the day, the template allows them to have a tool in front of them to help guide them as they monitor the business and make daily decisions, because they know the goal that they're shooting for. They're shooting for a certain amount of cash in the bank by the end of the year. And if they're able to achieve the excess, they now know they're building a reserve closer to that 6-month reserve that I was talking about earlier. So that concludes our discussion of the cash template. You can use that cash budget template for doing a monthly budget, for doing a quarterly budget, or for doing an annual budget as we just completed here. It's very flexible. It's based on your assumptions. The key is you want to make sure, again, that you're using historic information that you can validate from documentation, from other facts that you have about your business, so that you know the data that you're using is going to be helpful to you and is actually going to give you a clear picture of how your business is performing or could perform in the future based on the assumptions that you're making.